We're going to swing a little bit. Hey, folks, how about a little swing trading? This session starts. Let's get going. Welcome aboard to the Academy. And Jonathan, you going to move the slides?
Yes, you can do
All
that.
right, start moving. Risk involved in trading. We know about that. Hey, Jonathan, past performance is not indicative of future results. It'd be hard to beat 100% like last month, wouldn't it?
Yeah, that would be difficult. Good
In my
luck.
opinion. Folks, I think the market's going to have an upside breakout this year. Write this date down, July 21st. You'll be able to join me for what I call it's a chimpanzee time. T-Buzz is coming out.
Let me see.
All right, here's our stocks that we have in our 25 tickers. Jonathan, you want to go through that for everybody, and I'll sit here and listen with Bill.
Yeah, I just updated this, and what it shows is the month open for the futures and stocks down below that we're looking at this month. The FTD high and low is the first 3 trade days of the month, which is an important algo that Tom's created for us each and every month. Column E is the current price to compare the current price to the FTD algo and month open. And the 2 columns over here, the stock is above the first 3 days high. That means obviously it's also above the month open. So that's good. AMD is setting up long. It'll say long if that's the case, or vice versa. If the stock is below the month open and below the first 3 days range, it'll say short. Bonds say that. So if we just scroll through this list, we'll take note of the longs. AMD, Black Sky is a new stock, Coinbase, Circle, CBX, IBIT, so several Bitcoin related, crypto related. NNE is nuclear. There's NVIDIA. Tom's talked
It's
about
telling you
that.
what to do, isn't it?
Yeah.
I'd follow that. Hey, do you have the aluminum company in there?
Alcoa, I did add that, and it's close to the, definitely closer to the high, just a few cents away from the FTD
Will you
high.
set an alert for me at 32?
32, what do you say, 32.11?
Yeah, let me know if it gets to 32.11.
Okay. This spreadsheet, if you want to follow along, I updated right before time goes live every single day.
Would you, Jonathan, when we finish here, will you print me and Bill a couple copies of that here at the office?
Yeah, we'll have to figure out how to get that remote support working, and then we'll do that. Or actually, is Adam at the office there with you today?
No, Adam's not here today.
Okay, never mind then. We'll get it going.
Okay. All
And
right.
yeah, the spreadsheet is on slide 3 of today's presentation. Let me post the slides again, and then we'll get moving forward.
All right, I'm gonna just tell everybody this, and I just had this discussion with Bill. Why am I playing the market long? Very simply, I'm playing the market long because I'm above my monthly open. Once it closes above 63.33, I'll go into a little bit stronger market, but I'm still trading from the long side. I look at every dip as a buying opportunity. And so you'll hear me staying long. Now, if I'm trading futures, that's a little different story. I might trade for a couple hours to the short side, but that's just a short term stuff. But I'm talking about stocks and stock options. I want everybody here to acknowledge why I'm playing the market long and why that's the way you're going to make big money. Okay? Being on the right side. 7 out of 10 days, the market's going to be higher if we're going higher. Just keep that rule in the back of your head. Okay? All right, Jonathan, let's go. What's the next slide? All right, this came from the Markets Never Sleep. You ought to have this book. Jonathan and I were talking. He's got it at his desk. I got it at my desk. So let's do it. So, Jonathan, since you wrote it, you want to go through it for everybody, and I'll just chime in when something's I want to add something. Why don't we do
Yeah,
it that
sure. Yep, it's chapter 8 of Tom's second book, Swing Trading Strategies. In that book, Tom talks about swing trading futures and stocks and options. We're going to focus on the stocks and options side. Characteristics. And this is, Tom may have some updates to this to the current day, but I think they stand pretty firm even in today's market. But characteristics of stocks, Tom looks for an average daily range of at least $1, gives you opportunity to make some money when you're trading it. Good liquidity. You want to be able to get in and out of anything, the last thing you want is getting in a trade and then can't get out at a good price. That's not a good place to be in, stocks or options. Stocks should be performing well in both its sector and the overall economy. Think of the big picture, which Tom literally just covered, his thoughts on the bigger picture. Spend time getting to know each stock and its personality, whatever its unique traits. Every stock will have some unique traits. Get to know it. Focus your time on trading just a few stocks. Be really good for you. Here's an insight from Tom in the book. It's okay to buy and hold a strong stock, but never buy and walk away. Never buy and just say, all right, I'm good to hold it forever. Don't do that. It's okay to buy and hold stocks, but keep an eye on them. Don't ever just walk away. Tom will always place the stops in place and monitor any stock position on a daily basis. He must have said that about 10 times in the chapter.
It hadn't changed these years either, because every afternoon I'm looking at my account, pitching the losers and holding the winners.
And on that note, when you're looking at your positions, Tom makes the point in the chapter, always refer back, if you're long, refer to the prior day's low as the level that need to hold at the least. Prior day's low. If you were short, it would be the prior day's high. Here's a rule. Always decide in advance how much you're willing to lose on any trade. And if the market takes that money, you let the trade go. You don't hold on. You don't hold on and hope. If the market takes your money and stops you out, you stop out. And on that note, you'll hear Tom say this time and time again. Think of each trade as just one of your next 1,000.
You know, I've expanded to 10,000 since I wrote the book.
Updated. One of the next 10,000.
That's a good rule there, folks. You got to realize that when you're trading, you're going to have losses, part of the game, but you can't let it keep you from making money when the market sets up. You got to act when your process says act.
All right, now this is, I thought it was a good snapshot just to take from the book since we are taking lessons from the book. This is Tom's 3-day long option plan. So you've heard this before. Tom's restated it in current times, but number one, only risk 50% of your initial premium. For example, if you paid $3 for an option or stock, never risk more than half of that, which is $1.50. And I don't have the chart here, but there's a good table, I think, from one of Jesse Livermore's books. If you lose 50%, just to get back to break even, you have to gain 100% from there. So that's probably, Tom, where that rule number one came from. Number two, liquidate the entire position in 3 days. Now, this is the 72-hour rule that Tom is talking about all the time. If you're losing money after 3 days, just get out. Number three, only choose options that are near the strike price. All right, that's to keep that has to do with, the value of the option, and you don't want it too far out of the money. Learn the difference between intrinsic and extrinsic value of options. I'll let you do that. Go to optionsplaybook.com. It's a great website for that. Number four, make sure that the option has a minimum of 30 days until expiration if you're buying option. Mark says rule number two has helped him tremendously, or immensely, he says. I'll repost that in a second. I want to get this optionsplaybook.com in the chat. And I'll repost the link if you're just tuning in for the slides. Number 5, liquidate 50% of your position at any time during the 3-day period if you are profitable by 25%. Tom still does that today. Initial target for all of his options is 20 to 25%.
I know it sounds, different ways of saying it, but I'm pretty consistent with the rules I came up with that made me money and modified a little bit. But generally speaking, when you hear me talk, and keep in mind, this is not a 5-week process or a year process. This book was written in 2005, and I'm still applying what I put down in that book when it comes to option trading. That ought to tell you something.
Sure does. You've also seen this quite a bit. We've expanded it to option spreads, but Tom kept it simple way back then too. If you're looking to be long stocks, but you want to trade options, you can buy call options or sell put options. If you're looking to be shorts, stocks, but you want to do it with options, you can buy put options or sell call options. And finally, this is in the book, trade secret number 6. If you trade options, keep it simple. Liquidate long options quickly to avoid time decay. Be certain that short options are out of the money. You want the opposite there, and there are no more than 45 days until expiration. So you want more than 30 days on long options, less than 30 to 45 days on short options. Now, we are live on YouTube this morning. We're going to go to a live market here soon, I imagine, but the recording from today is on the live tab on Tom's YouTube channel, which you can get to by going to dtitrader.com/YouTube.
I think that little sample out of that book was written many years ago, but think about all the stuff in the Markets Never Sleep that help you today with the 24-hour trading and everything that we're doing. So you can get it on Amazon, I think, still, but I keep it behind me and I'll refer to it from time to time because there's a lot of good stuff in that book. And Jonathan, you want to go live and let's just look at a couple things real quick. All right, the first thing I want to tell you is that the market has resolved itself to the upside. This morning, it was sucking people in, trying to get in to go short. And Bill will tell you, I was sitting here talking to Bill, I said, I'm looking to go long, but I won't go long. My hands will stay off the mouse until it's time to act. And now look at the market now, where it's resolved itself, it's coming up. My target is, I don't know if we'll get there today, but boy, it'd make my day if we did, if we got to 63.33, which is the high we've been to. And anyway, that's pretty good. Neil asked, why on our long calls or debit spreads do we buy within the 30-day window, like TLT and GLD yesterday? Neil, those are more trading approaches. Until we get above 63.33, we don't know for sure this month's going to be positive, because the 3-day algo that he showed you at the very beginning has 63.33. We need to close above that. Once we close above 63.33, the market's you're gonna see a whole different market develop for people, and they're gonna say, whoa, let me get in. There's gonna be a constant flow of cash coming into the market. But if you're day trading, you want a lot of bang for your buck. It's better to use a shorter term option, especially with our timing. It's pretty awesome what we can do in a short period of time. And one of the beautiful things about what we do, we're constantly reviewing it. And like right now, we had a slightly negative reference bar, but I didn't bite because I'm looking at the weekly trend, I'm looking at the overnight trend, I'm looking at everything. And my pivot number today, remember, pivot's first and forefront, 63.05. We're at 63.15 right now, Jonathan, right? Okay, so we're sort of cooking with gas. And some of the stocks that haven't kicked in, like Nvidia's correcting from 64.5 down to 62.5. Oracle's correcting from 239 to 235. They haven't kicked in yet. Look, a little rotation going on. Put AA in there. This is a stock I'm looking at, Alcoa Aluminum. Yeah, see, it's looking good. They're buying that stock. Anyway. All right, Jonathan, AMD. Let me look at AMD. Yep, you're right. AMD's rocking and rolling. I need to be doing a trade on AMD. So let me go get back to trying to find us a way to make some money today. And but you're right about AMD. And just to show you, Jonathan, put the ETR line, blow the ETR line up on AMD and showing the power of tape reading. And if you, Bill just made his first money with his one-on-one with me on an option we bought. Yeah, I heard it go off. That was pretty good. I heard mine go off. Anyway, but if you look at AMD, I want to take you to 140.90, 142, starts breaking out, 43.54, 43, look at that, 44.45. AMD's in play. AMD's in play. So I'm going to go get with Jonathan. We'll come up with a trade for a couple of our programs. And I think this was a good lesson for everybody. Did y'all enjoy this lesson on swing trading? All right, perfect. Neil, I'll give you a call sometime after lunch. It's going to be a great day. I told you that this morning. Got to know how to dance. All right, see you, everybody. Thanks, Jonathan. Good job.